ground and it go off. Yeah, hit the ground and it go off. Yeah, yeah, run it. Ooh, I really feel it's my time, think it's my year. Yeah.
All right. Good morning, everyone. We just got a jobs number out. For those who care, we'll be talking about that with John Netto on in a couple of minutes. But I know what you guys are here for. You guys are here for the charts. You're here for JC. You're here for Strazza. Let's bring them on. Featured guest today, in addition to Netto and Kimmy, we'll have Anne-Marie Baiynd, one of our favorite traders, should be on in a little bit as well. And yeah, that's the deal. Good morning. Let's roll. It's the morning show. Hey, hit that like button. Come on, do it. Takes 2 seconds.
All right. Happy Crypto Friday, everybody.
Good morning. Oh, that too.
What is happening? Oh, yeah, Crypto Friday. Did we forget? Did we all not dress the part? Huh?
No, I haven't dressed the part. We haven't done Crypto Friday in a couple of weeks. So it's basically Friday. We got Crypto Friday. We got a jobs thingamajigger. As a reminder about the jobs number, we only really care about it insofar as the volatility it creates, right? We're not so much interested in the numbers. We're interested in the reaction to the numbers.
Spencer, don't front. You're kind of interested in the number a little bit. Don't front.
Like 8% of it is the number.
What do you think, Strazza? You think Spencer cares, but he's just trying to be cool a little bit? I think he cares a little.
Did you just say you're interested in 8% of it?
Yeah, 8% of my interest is from the number. 93% is from the reaction to the number.
It's very specific interest number.
Yeah. Also, like, I don't know, man. I saw what was it last week? A bunch of economic data got revised from like the last year. So like, they're revising everything. So
that never happens. It never happens.
Right. So anyway, hence why I don't really care about the number itself, because it's going to get changed 10 times from now until the end of time.
That's right.
Anyway, well, Netto on. He's trading this stuff right now. He'll come on and break down the trading action in a couple of minutes for us. So we'll save the discussion about that until then. In the meantime, should we do some state of the markets?
Do a little state of the markets. Let's talk about what's going on. I think it's important. We got a lot happening, and I want to get right to it. Hit it.
All right.
All right, I want to show a couple of return charts. I want to see the exact day of the March low of 2020. What was the exact day, Strazza? Do you remember off the top of your head? I'm usually pretty good at this. It was March the 20th.
March 23rd, I thought.
I was going to say the 23rd. Yes, I thought it was. It was a Monday. I know it was a Monday.
March 23rd, no?
There was no March 23rd.
Well, it was definitely it was the second or third Monday of the month. I can tell you that for sure.
Are you sure it wasn't the 20th?
It may have been the 20th.
It was Monday, March 23rd.
Oh, there's no March 23rd. It would go straight from the 20th to the 24th.
Maybe your chart does, but I would move on. It was March 23rd.
Well, either way, I've got some return charts that I want to kind of show here. Should we save the Crypto Friday? Should we just dive into the regular charts? What do you think? I don't know. I'm excited here.
I have one crypto chart.
All right, hit the crypto bumper. Hit the crypto bumper. Let's get into it. Come on.
Really?
Yes.
All right. I thought are these crypto return charts? Is that what they are?
Yes.
Oh, okay. Fair.
All right. So refresh the charts so you have all of the updates, Spencer, and throw up slide 1. We're going to show the first 3 charts here because I think that, it's a friendly reminder that Bitcoin continues to outperform everything, right? Contrary to popular belief, Bitcoin is hanging in there better than anything else. Volatility is as low as it's ever been. And the kids on the street, Spencer, are telling me that Bitcoin is so boring and they're looking for volatility. So they're going to learn how to trade bonds. That's what the kids are doing.
Well, isn't that a bad thing? Because volatility is a feature, not a bug of Bitcoin, right? People want the vol. They want the juice. They want
It's
the beta.
obviously not. It's the furthest thing. It's actually never been less volatile, actually. And the returns have been steadier than anything else.
Nobody's in Bitcoin because they're looking for low vol. They're in it for the juice.
Are they? My understanding is that it's a store of value.
Okay.
Is it not?
Yeah, right.
You might be in it for the juice, but I don't know. Maybe a lot of people are not in it. In fact, the data suggests it's actually the exact opposite. The long-term holders of Bitcoin, the hodlers, if you will, that have held their coins for more than 155 days, there are more of them than ever. So there are the fewest percentage of Bitcoin traders actually trading them that we've ever seen before. How do you feel about that?
Well, of course, because the volatility is low. No one's trading it.
Oh, that's a fair point.
Yeah,
I was going to say is the fact that there are so few traders the reason of a lack of volatility, but your point is the lack of volatility is creating the fact that there are so few traders.
What is there to trade? Like what? Like a tight range? All right.
That's a fair point. I'm with you. I was making the exact opposite point, but I'm not gonna disagree with you. That's a fair point. All right. So Bitcoin doubling the returns of the NASDAQ 100. So when you hear that it's only 7 stocks driving the market, it's actually cryptos doubling the performance. Now, let's remember that the year-to-date returns are very skewed. If you're out there listening, this is another warning. Year-to-date returns this year in particular are very, very, very skewed. And the reason they're so obnoxious is because in the first week of 2023, we got massive rotation into the biggest underperformers that we had seen in the market last year. Growth, technology, these things got smacked while everything else was working. And then rotation came in the first week of the year. So year-to-date returns, generally speaking, are relatively meaningless. This year, they're even more meaningless, right? Less meaningful, more meaningless, right? So just remember, people that are pumping these year-to-date numbers, keep in mind they don't have your best interests at heart. They're either bad at math or, even worse, maybe didn't even bother to count. So remember, the massive rotation we got in the first week of the year really skews these year-to-date numbers. So let's eat our own cooking here and take it back to the October lows. Spencer, next chart. Since the October lows last year, the S&P 500 is up 20%. Some might call it a bull market. The Dow Jones Industrial Average up 16%. NASDAQ up 35%. Big winner. That really got going at the turn of the calendar year. Bitcoin, once again, best performer, right? Even since the 2022 low. Let's take it back even further to a prior cycle, Mr. Israel. Back to the March 2020 low, Bitcoin, even outperforming crude oil, which energy stocks and crude oil have been the best performers. Bitcoin just embarrassing them in terms of returns.
How long? So it looks like it was just after. It was in April, wasn't it? When oil went negative. I think it was April. Not so. Oil went negative right after this chart starts, and then that you talk about skewing the data. That skews the data right there.
Listen, we can anchor it. We can anchor it to May if you want. The numbers are going to be the same. They're not going to be much different. Okay. Yeah. So the bottom line is, Bitcoin has been quite the outperformer, which I think goes understated, or very understated, right? People are just but you had like 60 minutes, like telling your parents what happened on Twitter a year ago, this weekend, right?
But people's moods are dependent on how far below the all-time high you are, right? So Bitcoin's pretty far below the all-time high. So
fine, but the average investor in Bitcoin is in the green, right? When you look at the realized cost basis.
Sure. Yeah.
So your investors are making money in Bitcoin. They're in the green. So
yeah. All right. Yeah. I mean, relative to a lot of other stuff, it's not so bad. But
how many assets can you say that the average investor is making money?
Depends on your time horizon, doesn't it?
Yeah, no, that's fair. That's fair.
So stocks.
Just again, something
most
to
of
think
them.
about. Throw up slide
Yeah.
6 here because I think this. Why don't you go to slide 5 first, actually? So this is the big one for me. This has been the big one. We've been talking about it all year. This is it. You know, and that 30,000 level is there, and that's a big one for me. It's closer to 31, but that's tomato. These former support levels from 2021 broke last year, and that's been resistance throughout 2023, right? This is it. This is all that, as far as I'm concerned, as far as Bitcoin on an absolute basis, this is all that matters. It's all that matters. Nothing else matters. If Bitcoin is stuck below this overhead supply around 3031, more trouble, messy for longer, all of these things. But you got to be impressed with how it's held in there. Look at BTC. Look at slide 5 here, the next one. So this is a zoomed in look at what we've been seeing, and it's really holding support. The 25,000 is held in there really well. Bitcoin was actually in the green. So was Ethereum last month. Ethereum last month and Bitcoin, both positive. So what was positive last quarter? You had...
Well, allegedly we made inroads towards getting a Bitcoin ETF. I don't know.
You think that has something to do with it?
No, not really, actually. But I'm just saying what headlines we had from a crypto standpoint.
I don't know. I think that maybe... I don't know. I think maybe... I don't think it can hurt, right? But
no, it certainly didn't hurt. I don't know.
My question is, when we actually do get the ETFs, and my understanding is that they're all going to get approved at the same time. There's going to be like a handful of them, which is silly. But when that does happen, is it going to be a surprise to anybody?
No.
A lot of it's got to be priced in, right? The question is how much from the super.
All right. Well, if this is that priced in, then we're in trouble. Or it's a non-event, right? Because this is nothing.
Listen, I mean, as a practitioner of the markets and an observer for many, many years, I have seen so many times the buy the rumor, sell the news, the all of this is priced in sort of mentality. And I don't see this being any different. But then the hardcore laser eyes, diamond handers, they're telling me that we're underestimating the power of those inflows. They point back to when GLD was created. All of those inflows that came into gold because people didn't have to buy rocks anymore. They could just buy the digital version, and look what it did. I don't know. I don't, this is not my area of expertise. I tend to lean more to, as optimistic as positive, all the signs that I'm pointing to. Let's remember that JC keeps it real around here. And the bottom line is, I don't know. I don't think it's going to be a big surprise when we finally get it. It's going to be like, all right, they approved the Bitcoin ETF. That took longer than we thought, but all right, they got it done, right? I don't necessarily think that it's a quote unquote buy the rumor and actually sell the news. For me, it's more like, how much of a news event is it? It's just another day.
That's sort of what I'm saying too. And if this price action is that event being priced in today, then it's not really much of an event now, is it? Because otherwise, we'd be breaking out. I would assume. But
hey, speaking of ETFs, why do we need a new ETF? Check out GBTC. Look how clean this is.
That's not an ETF, isn't it? A trust.
It's gonna be.
Isn't it a trust that nobody actually trusts?
Mm-hmm.
Is that about right? Is that why it trades at a 30% discount?
Gonna be an ETF. Hey, should we?
Hold on. Time out, Spencer, because this is where I'm ignorant.
Okay.
Is that what's going to happen? They're actually going to convert it to an ETF because they won the lawsuit or whatever?
Yes. They are doing it. They've said they're going to do it. I have a theory, not just my theory, that they don't actually want to do it, but they kind of have to. I mean, their hand is forced a little bit. But
you mean by lawmakers?
They can do whatever they want.
No, by the market. The market
compete with the lowest fee funds.
Right. Well, there's that. Yeah. That's hence why they have to convert. So,
can we talk about actual? Do you have a chart that you want to show, or is this a chart?
That was it. And then, I mean, are you paying attention to what's happening like right here, right now? We should probably mention this jobs report.
I said, do you want to? We got Neto here, so we should bring him on.
Yeah.
Can we talk about this consumer discretionaries?
Let's talk about how the markets.
Tell me about the jobs. Tell me about the jobs. Was that good for you as it was for me? Tell me.
Blowout report. It looks like.
Well, yeah.
What
the
does
numbers,
that mean? What does that mean? Blowout? Does that mean more unemployment, less unemployment?
Estimates were here. For this, we're talking about new jobs created. This is the estimate. This is the actual. Right. That's what blowout means. Okay, like way above. So
336 JC versus 170 projected.
All right, wait. We got John here. John, good morning, man. What's up?
Hey, good to see you guys. What's up, man?
There he is. Instead of us three knuckleheads talking about this number,
Yeah.
can we just hear from the horse's mouth? Tell us, what does this mean to us?
John, let me go. Let me try. You'll tell me how I do. Okay. So the market was worried after the JOLTS report that the jobs number was gonna come in light, like less jobs. Is that right? And instead, we got way more jobs.
No, the JOLTS came out and was actually bullish because the JOLTS of the job openings out there.
Okay.
Yeah.
So they had were actually dramatically bullish. It was bullish, bearish for bonds. Okay, bonds sold off, right? But we had the ADP number 2 days ago, which did come in light, and so based on the ADP number, Strazza,
That's the one.
I think that's where you're going with that. So the ADP report came in light, about 75,000, missed by, meaning the survey was about 150 on ADP, came in at 75, and so this headline number, fueled by the private payrolls, would also come in light. And what's important to keep in mind is that those other reports don't have a wage component to them, guys. So there's three things now. So it used to be, and by used to be, I mean like 2 years ago and before, and there'd be some intermittent time period where the jobs report would just be about the jobs, and that's what Spencer just mentioned at the outset of this clip. And like, listen, the survey was here, but it came in way above here. And so that's, as a standalone, it's bearish for equities because it means that the Fed could even hike further, okay, initially. But there's two more factors now going back in the last year and a half, and that is there's an average hourly earnings component, and there's also the unemployment rate. Now, as I've come in here and talked about before, the Fed has 4 meetings every year where they put out what's called the Summary of Economic Projections, okay? And they have two goals within that, the whole Fed statement thing. One is price stability. The second is maintaining an employment market that's consistent with that. So full employment, price stability. All right. So today we actually had the unemployment rate tick higher. All right. So even the way this blowout jobs report, which we're talking, survey was 177, we came in at 363. Was it 336? So you're talking 170,000 jobs higher. That's a 4 standard deviation beat. All right. Now it is the Department of Labor. Yeah. That's pretty demonstrable. However, because it's never easy, right? We have the average hourly earnings component actually come in lighter. So even though we have more jobs, we have wage increases decelerating. Okay, and that's inflationary. All right, so the unemployment rate went higher, and it's important to keep in mind that there's 2 surveys on this. There's what's called the establishment survey and then the household survey. Okay, so they're done by different factions within the Bureau of Labor Statistics. All right, so the establishment survey is what comes out with the jobs numbers themselves. That's the 336 versus the 170, and then the household survey comes out with the unemployment rate. All right, and that came in at 3.8 versus 3.7%. So there were two strikes, albeit minimal, that were actually dovish to say the Fed could sort of stop right now. But there was one really big thing that was very hawkish, and that was the jobs number that said the Fed could keep on going. And that's why we got this big spike. But the market's kind of trying to process this and sort of in real time weigh what's important. You know, whether it's like, well, this is a blowout jobs number, but gosh, wage inflation is sort of decelerating right now, and then unemployment rate did tick higher. Okay, so how much of these? Yeah.
So does the weaker wage acceleration and the weaker unemployment number, does that imply that they're going to revise this jobs number downward dramatically next month? Because that's I feel like it's got to happen, right? This is
why.
So wage inflation. That's
because the number gets revised constantly.
Well, it did it again today, but it got revised up. So, for example, the number 2 months ago was 157. It got revised higher to 236. So
okay, fine.
60K. The number 1 month ago or last month was at 187. It got bumped up to 227. So these revisions look
fine.
meaty. Yeah.
Okay, so
great color and everything. Are we buying stocks or are we selling them?
Yeah, that's what I want to know.
stocks are reacting lower, right? Because it seems like what John mentioned first about the actual new jobs, that's driving the price action, right? So maybe markets are worried, more rate hikes, bonds are tanking, stocks are reacting.
So what does this mean? It means that things are so good that they can keep raising rates and the market don't like that. Is that what it is?
Well, it means the market doesn't like, but there's a couple factors to this, and this is where we got to get a little more discreet in what we talk about is good or bad for the market. Okay, one, this is one event that tends to be a little noisy, and so what this means relative to the broader trend is as important of a question as how this market will push it. That being said, okay, I think there's a chance we rally on this. Let me explain why. All right, corporations are obviously driven by earnings, and if you have a stronger jobs market with actually decelerating wage inflation, okay, albeit it's a nominal amount, I think that on a relative basis, stocks actually outperform bonds today, okay, because we're looking at decelerating earnings, and I think the S&P, we're looking at S&P down right now, blah, 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 blah. Where's mine? Give me 1 second, guys. Okay, so S&P is at lows right now, down 47 points. It wouldn't surprise me if like we end up only down 25 on the day, 30 on the day, whereas like fixed income keeps on moving lower. Okay, because net companies, I mean, this is, if you tell me we have a really strong job market, unemployment is stable and wages are decelerating, I'm less concerned about that outcome for equities than I am for bonds. Okay, that's just that's where I'm at.
All right, so we're buying what, the S&Ps here?
We're buying the S&Ps lower. So in other words, like, but we're not like full stock. So right now we're at 42.45. I'm buying 42.37 on the S&P. I'm buying 42.30 and 42.25. Okay, because I think that we can ultimately process this, move higher. Conversely, I'm selling bonds on a bounce, meaning so 5 years right now at 104.14. I'm selling them at 104.18, 104.20, 104.24, and I'm providing liquidity. I hope that makes sense.
Yeah. Buying the dip in stocks, selling any rips in bonds.
Correct. All
right.
Yeah.
Makes sense to me.
Okay. That's
all right.
Hot, literally hot as hot gets take on the non-farm payroll jobs report. Compartmentalized with 3 sections, overlaid on a macro narrative, only here on Stock Market TV.
No, I love it. Neto, coming in hot, baby. I like it.
Extra early for you, Neto. We appreciate it. Thanks.
All right, good stuff, guys. You have a wonderful weekend. Steve.
Adios. Early for Neto. Are you kidding me? This guy couldn't sleep last night. He was so excited about today. Early for Neto. Are you kidding me? He's like, damn, it's about time. Now I can get some sleep. That's what it's more about.
Bonds are really, really tanking here, though, huh?
30-year futures down 2%. It's a big move. How many standard deviation miss was this? This was or beat, 4. Depending on
4.
That's listen. I'm not a math major, but it sounds like a lot of standard deviations to me. Can we throw more importantly? Can we throw slide 9 here? What do you think about this, Strazza? How do you feel about this? What do you think?
You know what I think? We've talked about this every day this week.
Have we? This is the first time I bring up this chart.
No, it's the same theme, though. The defensive sectors are skewing the risk information in these ratios. I would rather look at XLY SPY.
Got it. So what you're saying is that the denominator here is bullshit and that this time, in fact, is different.
Dude, they're just shooting one of these groups at a time. Did you see Staples yesterday? Coke, Pepsi, down 5% in a day. So I think that is definitely skewing the information that we're used to getting from these.
So you think that this time is different?
Traditionally, this is a fantastic ratio.
Traditionally, this is arguably the most informative ratio, certainly among equities, as evidence of risk appetite. I talked to some smart friends that suggest that this is a bullish indication for equities. Strazza and some others I speak to are pointing to the denominator and how they're rocking the denominator with bonds getting destroyed. They're selling utilities, they're selling REITs because there's no reason for fixed income investors to get their yield in the stock market when you're getting fantastic yields in the bond market, at least relative to what they're used to over the last couple of decades. So that this time actually is different because they're selling staples because they're selling their cousins, Utes and REITs. None of us, let's remind everybody that none of us actually know.
I mean, it sounds perfectly logical, right? It makes a ton of sense.
So you're telling me that this time is different? How about you guys? On the chat? Traditionally, when the black line's going up, that's good for stocks. By the way, go to the next one so you can see on an equally weighted basis, you're seeing the same thing, which doesn't disprove Strazza's point. Still the same point. The denominator, again, whether equally weighted or cap weighted, is really skewing these ratios. So this is not Amazon holding it higher or Tesla holding it higher. This is an equally weighted basis. It eliminates the Amazon and Tesla effect of consumer discretionary, equally weights it. But again, to Strazza's point, it's less about cap or equally weighted and more about the denominators getting slaughtered. And that's why this time is different. And we should just completely ignore the strength in this ratio. Is that what you're suggesting?
Nope. Putting words in my mouth. Not what I'm suggesting at all.
I don't know. It kind of sounds like what you're suggesting.
Nope.
For somebody selling puts in tech this week, you would think that you would suggest that this time is not different.
Nope. I don't think it has to be, this time is different. It's just, this isn't the best information that we can get from a risk appetite perspective right now because the denominator is getting absolutely hosed out here, and it's clearly because of the bond market and rates. And we're not trying to get a read on the bond market. When we look at this ratio, we're trying to get a read on risk appetite right now.
DeAndrea Financial makes a good point. What else confirms this view? Well, what else confirms the view that let's just say that this is a positive for equities? I would say the credit spreads continue to remain tight. Now, off their tighter levels and widening somewhat, but not what you would expect at all, considering the circumstances. At least not yet. So I would argue that the credit spreads suggest that this time is not different. Or do you think that the bond market is skewing those as well? No, right?
No.
Yeah.
Bonds and bonds.
Yeah, bonds and bonds. Right. That's what I'm thinking. If things are different this time, it makes sense. We have never experienced anything like we have in the last 3-4 years. Nick, respectfully, at any point throughout history, you can make that statement that we have never experienced anything like the last 3-4 years. Like, not experiencing something like that is actually perfectly normal. So,
Yep.
Yep.
Question from the chat for me. Did I consider the non-farm payroll data that was coming out this morning when I put on, I think he's talking about the short puts for the AMD position from yesterday? Yeah, of course, right? But obviously when I'm putting on a taxable trade like that, I'm aware of it, and I'm simply hoping that the reaction is in my direction. But I can't overthink that and not put on trades because of payroll report.
Yep, agreed. We have Anne-Marie Baiynd here. Should we bring her on for a couple minutes?
Please, let's do that.
And get her thoughts on things. All right,
Anne-Marie,
you ready?
Sure.
I hope she's ready. I don't know. We'll see.
Anne-Marie, OG. Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Anne-Marie,
good morning.
The house.
Hey guys, hello
What's happening?
from Glasgow.
Glasgow.
Yeah, Glasgow.
Wow.
They don't like those W's if you're a local.
Sorry.
Yeah.
I've never been.
So, how long have you been out there?
We got here on the 29th, leaving out on the 22nd. We're watching our youngest play for the British Basketball League. He's a pro player. It's his second year.
Oh.
And so last night was the first game in the arena, and he made game MVP at a double-double.
Nice.
Really?
Look at that.
Nice.
Look at that. The Knicks, sounds like the Knicks could use a guy like that.
How old
You know
is he?
what? He is 24. God help me. Yeah. I think that's, yeah.
How cool.
Yeah, it's been exciting. We were with him last year in Macedonia, and the Serbian leagues are, they throw punches. So this league's a little bit
Dude, these Serbians can ball. Let me tell you something. They come to the United States and they're just like, these guys are. It's not because it's not all about dunking over there. They're killing people on the court. It's a different story.
Yeah, they play physical ball, so he is in good shape this year.
Are you a whiskey drinker while you're out there?
You know, I am not, unless I plan to die. That would be the way I would go out because I'm terribly allergic to alcohol, particularly yellow liquors. But we are doing a whiskey tour in the Highlands tomorrow.
Very cool. Very cool.
It's going to be great.
Nice.
I love it.
All right.
We got a Scottish bar right around the corner from me that we find ourselves at quite often. For dinner, to be fair, we bring the kids. My wife doesn't like it when I say, let's go to the bar.
All right, Anne-Marie, what are you seeing out there? Same as everyone else?
Anne-Marie, we're selling puts in XLK. Are we crazy?
Well, not crazy, but they better be pretty far out of the money in my mind, or hedged, because we'll use the token JPM collar that they put on. This was one of the first months that I saw the collar get a back end. Right, they sold the 42, but then they bought the 34.10s.
And explain what that means.
And why don't you explain? Yeah, I was going to say.
Okay, so for the collar, now the collar doesn't say definitively that price is going to stay between things, but it's the way they hedge their portfolio by selling calls and selling puts on either side. And so they collect premium that allows them cushion if price action fades. So every month they've been doing that, and they've had a run of really good months. It's probably been maybe 4 months since they blew out of one side. And so this next month, though, they've sold the puts at 4,200, which means they're estimating a floor somewhere around that 4,200 minus all their premium, right? So I don't know how much premium they actually collected, but 4,200 is the floor.
No.
But what they've done in addition is bought the 34.10s. So my suspicion is they're expecting some kind of flush where they can sell those 34.10s at a profit and then watch it slide back into the range. So what that leads me to believe is that instead of direction, we're going to have really big range. And that range is going to give us candlestick wicks that will really test our floors, whether we're going long or short. And the reason for that, in my mind, is that we still have a bifurcated group. We have a group on one side that's saying, listen, we got a dumpster fire. I can see it off in the distance. It's only going to be a minute, but it's coming. And so people are sort of trying to position ahead of the flow that might be downside. The other folks are looking at Q4 seasonality. They're looking at, wow, it hasn't been this oversold since X. And all these sorts of technical things that say, hey, we're due for a bounce. And so they are positioning as well. Now, the Q4 seasonality group that says, hey, listen, we're going to have a bounce, they are agreeing that there's going to be some measure of volatility, but they are looking for a dip to buy. And so we can see that if we look at the SPX, the ES, the NQ, we can see them trying to put a floor in. Every deep dip is getting bought, except for oil. And a lot of those guys, man, did they get taken to the cleaners, because there are always two voices in the market these days. There's the voice that goes, hey, fundamentally, we're looking at reduced oil flows, increased demand over the long haul, no capital expenditures in the last 9 years of consequence, and we're going to have a crunch where we need oil and we just don't have it. Those folks are saying, obviously, the long-term goal is longer oil, but then all of a sudden oil falls off a cliff. The WTI fell off a cliff, moving more than, counting today's move, almost 12%. off of its high in like 7 trading days. And so that tells me there are people positioning on the seesaw and they're getting it wrong. And so what, in my mind, because the stock market is a naturally bullish forward pricing mechanism, I've got to look in the spaces where I'm holding the floor. I buy the floor, and if I don't break resistance, I get out until I get a floor test again. And so tactically speaking, that's where I am. And it is a very tactical place, because I suspect we could get up and see ourselves a flush, having a flush someplace that's completely out of the blue, but then completely buying it off the edges and having that space come
When
in.
you mean a flush coming out of the blue, you mean like just like a sector or group of stocks that you wouldn't expect that from?
No, I mean the broad equities that people are just sitting in and saying, I want to take a little dip. So another article came out that said, JP Morgan clients are only 35% invested in the stock market. They're moving over to the bond markets, and they're going to stay there until the bonds have themselves the floor. And so about 7 days ago, we've got the highest recording of dips, people buying the dip in the TLT, but look at how much further down they are, right?
Isn't that the problem, that people keep buying it?
Exactly. And what that does is when they set the floor in, it gives the other people, it's like the giant Ponzi, gives the other people the chance to get out on any kind of dip. And so for me, I'm not going to position with any size in the TLT until, one, it stops breaking lower on the weekly. Two, it breaches the last area of resistance. That's about 88 if I'm looking at the TLT. And then three, it pulls back and holds 85. And right now, that's nowhere in sight. And so people are going to dip and dip and dip and say, hey, this is a record separation. We've got record divergence. But see, it doesn't matter. Things aren't oversold until people actually stop selling. And that's not happening.
Damn.
Can you throw up on slide 1 here, Spencer?
Yes, we
What do you
can.
make
92.
of this, Anne-Marie?
Yeah.
Pardon me?
What do you make of this?
Very interesting.
Isn't it?
So obviously that's positioning in the CBOE.
Like you think that this is like zero TDE, like more liquidity, volume?
Yeah, I think it's all a measure of hedging. That's what it looks like to me.
They're just getting more action, making more money, being rewarded by shareholders. Yeah.
Yeah.
And
that's a hedging.
Yeah, one hole is like, oh yeah, they're just feasting on 0 days till expiration. Yeah, that's what this is. No, don't overthink it.
That's what I think. That's certainly what I think. Now, notice this. This was a very good comment made by someone I can't remember. I wish I could give them the credit. But they said, if you want to really look at what's happening, look at where the least number of options work inside of the market, and that is in the Dow futures. That's the least amount of options.
Liquidity.
Yes.
Like open interest.
And so, yeah. So what that tells us is a truer version of what's being positioned. Wow, that is a terrible. Look at that right there. The frozen. Do you see me frozen?
No, we see you good.
Oh my gosh, I see me frozen. It's horrific.
Listen.
So so yeah, that's if you want to compare what options are not doing and what price is actually doing, you look at that Dow and the Dow futures, because SPY, SPX, all of those that are the ES, all of those that are using massive amounts of 0 to 3 DTEs to generate revenue, those are creating skews that are just outlandish, and I think they're a red herring.
Can I ask you one more question before the fun police gets you out of here? can you touch on the sort of the currency crisis that you've been talking about throughout the year? Where you're like, there's something on the horizon. Was it a bond crisis instead of a currency crisis, or is there still something out there? What do you think?
Well, they're a little bit of the same, right? Because they're all deeply connected. And so my suspicion is it's still there, and I honestly think it's going to come out of the EU because Germany, which has been the anchor of all industrial growth, is simply grinding to a halt. And I think they're going to be between a rock and a hard place. If the dollar keeps rising the way it is, they're going to be between a rock and a hard place come January.
Yeah, I mean, the dollar strength has been putting pressure on stocks. When the dollar's weak, stocks do well. I mean, the negative correlation there has been as strong as any relationship we've seen out there.
Absolutely.
So, in my opinion, a dollar rollover, if you're an equity bull, a dollar rollover is not a want, it's a need. Would you agree?
100%. That's a great assessment.
Yeah.
How come? Why do you
Listen, if Anne Marie says it's a great assessment, how bad could it be, right? Must be great.
Anne Marie, why do you think interest rates are so resilient over in developed Europe, despite what you're talking about, the economy really weakening?
Maybe it's not.
Listen, they have to stick, because if they don't stick, they're terrified of inflation.
Right.
That's why interest rates are so resilient. Everyone is terrified of inflation.
Yeah. Are they like supposed to be done hiking the EU, or do we?
That's what they've said.
Okay.
That's what they've said. So let's say they stop, but the dollar keeps rising.
Yikes.
It's going to be a train wreck. Yeah.
I thought Germany was supposed to be the main beneficiary of Brexit. All this exodus of out of the UK.
Did that even ever happen?
Into Germany. That's what they said.
That didn't.
And yet, well, you know what? It's their energy policy that's really,
Yeah.
it's that energy policy that's given them a rough time.
Listen, Anne Marie, don't be talking shit about Europe. They're not going to let you out of there, right?
Yeah.
I don't know nothing about no Godfather.
Thanks so much for having me.
Thanks a lot, Anne Marie.
Have a great
Thank
week.
you.
Take it
All right.
easy.
Enjoy Scotland, man. She's the best. Oh, man.
Dude, Anne Marie trading out in Scotland. Good for her. Watching her kid playing hoops. That's pretty cool.
I own a barrel of whiskey somewhere in Glasgow, Scotland, in a warehouse somewhere.
I wouldn't brag about that. It's a little surprising that Anne Marie has a professional basketball player for a son.
Actually knew that.
Anne Marie, not exactly the tallest woman in the world.
Yeah.
I would say normal height. I did see a pro basketball player. Didn't see that one coming. Shout out Anne Marie. Maybe he's a guard. I don't know.
We got to talk about news. We got a lot of news to talk about. I know you got Kimmy on here and talk about some hot stocks, but a lot of news today.
What news?
Well, we had a big M&A headline last night.
Pioneer.
Yeah. So this is from the Journal, and the Journal is good for a M&A scoop every couple of weeks. They reported that ExxonMobil is close to acquiring Pioneer Energy. Ticker there is PXD. This would be about a $60 billion deal. Just to put that into context, all M&A in oil and gas last year was like $50 billion, like across the whole industry.
Now,
so
is there a deal? Is it done? It's just being announced, correct?
No, it's not. It's definitely not done. Not official. But usually when the Journal says it's happening, it's happening.
Is there a firm offer on the table, and we know how much per share? Because the stock's going to move today based on the deal price.
Well, you can just look at the market cap. So the Journal is saying 60 bill, and I'm seeing we're at 50, 55 right now. So,
and that's why you're up 10% here pre-market.
Yeah. So they're pretty good with this stuff.
It's interesting. If you zoomed way out on this chart, where it's going to open up today, 2014 highs.
Perhaps ExxonMobil is getting hit because they hate acquirers.
Well, and it's a big deal too.
It's a massive deal. It's a very, very large deal. So I think we have an ExxonMobil chart. Do we have an Exxon chart? I think we do.
We always have Exxon charts.
Can somebody get me Can someone get me a date to when Pioneer took energy out of their name? Can somebody?
No, I mean it probably could, but
I don't remember them. I don't remember them being anything else.
What? They were Pioneer Drilling. They were Pioneer Energy. They've been any. Yeah. Oh yeah. Oh yeah.
Wow.
Okay. Maybe they did it. You know, maybe you underestimated their sneakiness, but they definitely changed their name.
Maybe.
I find that hilarious.
Guys, what's going on with this Walmart study? Was that real news or fake news? Because
no, we talked about that yesterday.
Absolutely ridiculous, though. It was all. That's all that they were talking about yesterday.
Good, and you heard it here. You heard it here first.
You don't think they were just using that as an excuse to justify arbitrary selling?
Dude, strange, right?
What these fat pill drugs are? People have less munchies. Come on, really?
New York Post is writing about it.
Oh well, if the New York Post is writing about it,
you know what? You know what? The New York Post is trash, but it's my guilty pleasure trash. Okay, so don't knock the New York Post.
Is that why Pepsi and Coke were down 5% yesterday? Is it because Ozempic is ruining their business, or is it because interest rates are ripping?
Yeah, I think the latter.
The answer to that question is yes, Steve. That's the answer.
It's not because of shrinkage.
So here's what else slipped through on my feed yesterday about.
And then say quickly because I gotta get Kimmy on here.
Weight loss drugs may be linked to stomach paralysis, other rare but severe issues. Study says.
That sounds.
How long till they're banned? These drugs aren't going to be around forever.
No. So short, Eli Lilly and Novo Nordisk.
Everybody's out here comparing them to fen, all these terrible things.
I don't think they. All right.
Whenever a drug comes out and this many people are taking it and talking about it, and it's in the news as much, it ain't good.
Yeah, fade it. Yeah, fade it. All right, let's look.
Fade Novo.
I'm telling you, I like selling out of the money calls in Eli Lilly. We talked about it. It's on our calendar. After earnings, we're gonna sell puts.
All right. I'm bringing Kimmy on.
You like that?
Yeah.
Kimmy.
Hey guys.
What's happening, Kimmy?
Kimmy, what do you think?
Well, first of all, Spencer, I love the New York Post too.
Yeah, all right. Yeah, it's trash, but it's my trash. Okay.
But it was very funny because when I would be trading with my institutional clients at lunchtime, 12 o'clock, market went into a lull, and I'd say, and they'd be like, they'd hit me on AOL Instant Messenger. They'd be like, "Hey, can we bother you, Kimmy? Can we bother you? Or are you too busy in your post right now?"
Yeah.
I picked it up from the same newsstand guy every day. I'm like, here you go.
Let me tell you something. The New York Post, say what you want, it is a staple among Wall Street traders and analysts. Yep. I was on, and I've done TV on all over the world, really. So I'm sitting in the morning desk with Maria Bartiromo the other day, and there's stuff on the desk like coffee, New York Times, Wall Street Journal. And the only newspaper that was actually open was the New York Post. I think some ridiculous headline about some, model at a restaurant or whatever. And I told Maria, I was like, only in New York City do you sit in the morning show TV network and the New York Post is sitting on the desk. Only in New York.
Only in New York. It's a New York thing.
Yeah, it definitely is.
It's really funny. Anyway, obviously
we're buying this dip all in, making it rain, buying this dip aggressively, Kimmy?
It pisses me off because the SPYs dipped down to 419.70. I wanted it to stay down there because what I want is the 200-day broken during market hours. Right, during 9:30.
So you get the headline.
Well, there's still time for that. There's still time for that.
Yeah.
Oh yes. So I was like, damn it! I turned around, all of a sudden it popped. I was like, just stay down, and then I want to rip. So what I want and what happens are two different things. So now we have to see. IWM I recommended the other day. Some people I would think took it in the room. It was up at 172.30 this morning, which was above my target. So hopefully people did get out. So this is very annoying. So I'm like, what I had this morning, then what changed at 8:30, and then what's changing now. This is going to be a little difficult. I need to see. I'd really love that swoosh lower and rip higher, but you know what I want and what happens are two different things, right? Good morning, everyone. Hi.
All right, so big day yesterday, 5 for 7, long Eli Lilly, short Tesla, long Lulu, short Netflix, long Apple, making money both directions, long and short, and 2 losses in Moderna and Snow. Why don't you tell me about this morning's action in Adobe?
Well, no, you know, when I write my note at like 7 in the morning, forget it. I'm not. I don't even. That's why it's hard to like make a recommendation in the morning, because what goes on from 7 to 9:30 or 10:30, it's like it could be completely washed
All right,
out.
so it's down. It's down
Pre-market's the Wild West. That's why I love it.
It's a $500 stock though, down 4 points. Is it really changed
No,
that much?
it's not bad. It's got to get above 421, 422 to head up to 430.
All right, so nothing's changed.
So we'll see. You know, I have my triggers there. I have my alerts. I have my alerts all over. I'm looking at other names because I have to switch directions since the market's gapping down, right? And so it makes it a little harder. And of course, it's a Friday. I'm like, I'm happy for this week. It's difficult. Yesterday, got stopped out. Moderna. I was trying to give it wiggle room. Then at the end of the day, pops back up. It's a Moderna. I always trade small because it is a very frustrating name. It trades wide, almost like a NVIDIA, almost like an Adobe. Snow as well. I got stopped out at the friggin' thing, got hardcore rejected. So now I'll wait and see if it ever breaks the 200-day.
Hardcore rejected.
Yeah. So we'll see. We'll see if Netflix stays down below the 200-day. IWM got slammed. It was at 172.30 pre-market. Listen, they all got slammed. So
Dow futures are about to turn positive, FYI.
Are they moving now? I can't. I'm like, all right, so here we go. So I'm like,
futures are down 50 points. It's a flat.
I know. I wanted it to stay down, just stay down and poke below and come back up, but Mr. Market never does what
all right.
want.
Kimmy's going to her
men,
trading.
They don't listen, Kimmy. They don't listen.
They don't listen to me. All right, have a good weekend, everyone.
Kimmy's going to go live trade in her room where she goes every single day. She trades through the open and through the morning, calling out her trades live in the moment as she's making them. To get into the room, use the link in the description. Okay. By the way, just one more thought on the Walmart thing from yesterday. Yesterday was a really good example in where a headline may not necessarily be why, like the reason why a stock is down, but people will always look for a reason to justify the move. So it's very easy yesterday to say, oh man, Walmart says people are buying less food because of this weight loss drug, and next thing you know, Walmart's down, all the snack stocks are down. In reality, we've been talking about this table is getting hit for a while, so we know that that's not the reason, but it's just people will always look for a reason, and then it sort of becomes like a self-fulfilling prophecy, and it feeds into itself, right? It's like this feedback loop. So just a good example. This is why I pay attention to news, is because it can become that feedback loop, and it's sort of people look for reasons to justify moves all the time, and yesterday was a great example of that. So elsewhere on the news front, Tesla is continuing to lower prices. They announced that this morning. They're lowering the price just a little bit on the Model 3 and the Model Y versions of their cars in the U.S. just by a couple, what looks like $1,300. So down to below 40. We are below 40 grand on the baseline Model 3 in the U.S. All right, 38.9 is the new MSRP for that. So there you go. And then what else did I have on the news front? I had the ExxonMobil M&A. I had Tesla price cuts, and I had Disney rumored to be selling some of their Indian assets. But
India assets?
Yeah. Disney has a lot of Hotstar, is that what it's called? I think that's what it's called.
Don't know.
Yeah. That's what I got on the news front. Kind of a light-ish news day.
You still own Disney, Spencer?
Yeah, I don't look at it. It's just out of sight, out of mind, right?
That is, I believe that's called the avoidance. What is it called? It's the avoidance heuristic.
Yes.
Yeah.
Right.
Oh, I'm very good. I'm very good at ignoring my problems. So.
Yes, avoidance heuristic. It's very unhealthy.
Okay.
All right. Well, that's why it's a small piece.
Is there any so all this news that I'm being told that is so important that I need to not ignore? Can somebody tell me what it is? Is there anything?
Or I just gave you a couple of things,
Can we
but
just do the news?
I haven't heard a single thing of interest yet.
Well, yeah, it's not always going to be super interesting to you, but it's relevant.
ExxonMobil coming out and buying one of the largest E&P operators is not big news.
How big is it?
Consolidation in the oil and gas industry? Come on.
How big is it?
It's a big one. $60 billion.
It's 50. Yeah, that's not nothing.
It's 60.
That's not nothing. All right.
It's not.
That's interesting.
Definitely not nothing.
All right, that's interesting. Turn the page. I already forgot about it. What's next? What else you got?
Yeah, I know, because we talked about this 10 minutes ago.
It's a big deal. I'll give you that. It's a big deal. It makes sense, right? Don't all these energy companies have a ton of cash? The big ones, right? Isn't that right?
A lot of money.
They are hoarding cash. Is
They're
my
doing
understanding.
very well. Printing money.
Can we throw up this David Dennis Dick?
Oh yeah, that was funny. I'll pull it up right now.
This is the homie Dennis Dick.
Yeah, we got to get Dennis on the show. One of these
Get him
days.
on the show. Tell him you are invited to the best morning show in finance.
Yeah, this is great. I loved this when I saw this.
What does this mean? What does this mean to you guys? Tell me, because I'm no fundamental guy, but this doesn't sound like a great situation for the top two.
Didn't we talk about this the other day? And I think someone posed. One of us said, "Is it really that simple? Is it so simple? Is you just look at the companies that have the worst." You can whatever ratio, debt to equity, debt in this case, debt to market cap, doesn't matter. And those are the ones that suck, right? I mean,
but so these companies, again, I'm no. This is just outside looking in. I look at this and I see the top two companies that have twice as much debt as their company's even worth, and then their employees are asking for more money, and then they want to work less. Meanwhile, the one at the bottom is just printing. I mean, I don't know. I mean, I'm no accountant or fundamental analyst. I don't know, but doesn't sound like this is going to end well for the top two. Am I wrong?
Well, fundamentals is all about telling yourself a story, right? And so the fundamentals of the story to be told in GM and Ford is the one that you just said. It's not a good one, right? It's hard to.
Didn't I saw some sort of news that like GM's airbags were like blowing up yesterday? See that?
I thought that was Ford. I thought no, Ford. One of the two.
General Motors leading the league in the new 52-week lows list appearances.
You know what though? I'm thinking about Ford back. What was it? A couple years ago when Ford got to $20. $25. Excuse me. And the story being told at that time was that Ford was actually going to be the number one EV producer because they make more cars in an hour than Tesla makes in like a month or whatever. But so that was the story being used to justify that move. But
what's the anybody buying these shitty automakers down here? General Motors and Ford. Anybody? Is there any reason to own these things?
I don't.
Do they pay dividend? Just kidding. I don't know. No, there really isn't.
If they're paying a dividend, then they're really screwed.
No.
Who are they to pay a dividend? General Motors and Ford paying a dividend is like these sell side firms having an opinion on other companies. Like when Credit Suisse downgrades the stock. Like, who are you to opine on? Worry about your own house, right?
Tesla, Tesla has $1.5 billion in debt, though, not $5 billion.
Okay, well, Still.
All right. So nobody
Although-
can think of any reason to buy these things. So we short them.
The reason to buy them is I think if you actually believe that EVs are the future and that the companies that make the most cars are going to make the most money. In which case, GM and Ford make the most cars. So I don't know. That's not a very good argument.
To me, I think it's very clean. If General Motors, which is the weaker one of the two, is below 30, short it. There's support at 0.
Well,
am I wrong, Strazza?
No. Zero's out of the question. Well, no, it's not.
Wow,
it happened before.
0 is out of the question.
No. I take that back. It happened before.
Yeah.
So if it can happen once, it can happen again.
Strazza, any arguments? No, you're not pushing back on my short position here.
Isn't Ford like the only automaker besides Tesla to never go bankrupt?
Might be.
The only U.S. automaker. There's some.
It's holding up way better than General Motors. So if you're going to short one of them, you short GM. But I can't imagine GM going to 0 and Ford making new 52-week highs.
What's
you know
worse?
What I mean?
What's worse? The airline industry or the automakers?
Airline.
Yeah, airlines, because at least there's automakers that don't suck. I can't think of any airline that doesn't suck.
Well, I think it just comes down to that, right? The airlines can't make money and they're selling you a terrible product. I like my Ford. They can't make money, but I think people like their cars.
I drive a Ford. I don't like it.
You get what I'm saying, though. I think people
what
are.
What do I have? I have a GMC, right? So I have a GM. I have a General Motors.
Yeah.
Got it.
Yeah,
I love it, by the way, but I'm a simple man.
With airlines, your only real hope with airlines is like praying for like consolidation. I think. I don't know.
How much more can you consolidate, dude? There's three major operators.
That's right.
Well, no, but Frontier and Spirit just merged, right? So, or they're trying to.
Yeah, but aren't these like the worst two airlines that nobody uses?
You know what company absolutely blew it? And like,
I mean, JetBlue
10 years ago, JetBlue has done everything wrong that they possibly could. Everybody, especially if you lived up in the Northeast, you loved JetBlue 10, 15 years ago.
I did. I remember.
That's true.
I remember 20 years ago, even.
Yeah.
Yeah, for sure. So okay, nobody's pushing back on me. So we're shorting General Motors on a break below 30. The trade is very simple. If GM is below 30, you short it, support at 0.
Throw up my laggards chart, Fonz, because I think that this is making your point, JC. So the weakest stocks, the worst stocks, are resolving their ranges lower, and I think that's more or less what you're looking for in either these Ford or GM shorts, right? This is what the worst stocks look like, leading lower. I just picked a random grouping of, they're all speculative indexes, electric vehicles, microcaps, genomics. This is what the worst stocks look like. If you're shorting GM or Ford, you're making the bet that they will end up looking like some of these worst stocks.
What's in that ETF? Cars. It doesn't trade.
Electric vehicles. Probably a lot of Tesla.
So here's the problem. Not the problem, but the reason it sucks. It's equally weighted. Not exactly equally weighted, but pretty much. The biggest component is Tesla. It's only 4%. Something called Aptiv is another 4%. Do you know this one? Aptiv?
I do.
No.
Panasonic is the third largest holdings. Who knew?
Hey, you know what? Good for them.
Guys,
get some global exposure.
Guys, speaking of airlines, I got to tell you, one ETF that I am just shocked is still around.
Jets.
I
was looking at Jets yesterday.
Why? What's wrong with that ETF?
It's underperformed forever. It's just been terrible.
Since inception. Yeah, it's awful.
It's bad.
Not $1.4 billion in assets, trades 3.5 million shares a day. I mean, I see no. Why would they delist it?
It could go away tomorrow. I won't miss it because you have the NYSE ARCA Airline Index.
It has 1.4 billion in assets and trades a ton of volume. Why would they delist it?
Well, nobody's outperforming buying Jets. But yeah,
but GDX has sucked forever, and that thing's not going anywhere.
Yeah, but gold bugs are crazy. There's no
there's liquidity and there's assets. If there's liquidity and assets, they're not going to delist it. It serves
No.
its purpose.
He's not saying they're going to delist it. He's saying it just sucks.
You said you're surprised it's still around. By definition, you're surprised it's not delisted.
Fuck it, Spencer.
Am I
wrong? He's surprised that people have continued to own this thing. Let's put it that way.
You think it's because? Are you surprised that people continue to own this thing, or is it just? Sounds to me like it's just a vehicle that people are trading.
I'm surprised that it still has this much interest because this group of stocks has underperformed forever.
Also, there's no alternative, right? You talk about the XAL, the New York Stock Exchange Airlines Index. You can't trade that thing.
No, well, interest. You could. I'm sure there's options, right?
The interest in jets, if you just look at the volume, it just exploded. This thing was really sleepy, and then it exploded after COVID, right? People, because it's the only pure play, right? So, yeah, the volume on this thing, and it's come down a little bit, but it's taken 3 years to get back to pre-COVID volume levels. So
hold on, can we just talk about?
No, it's still way higher.
Hold on, I think it just kind of like slipped through the cracks here that Strazza and JC totally agreed for once. On throw slide 1 up there. It's a new slide 1, but throw that one up there. Strazza here.
That's a good point.
Strazza and JC agreeing on the trade.
Yeah. So somebody asked about this one on Chart Request Live yesterday. And all I could really say was, listen, I'm not saying it can't go higher, but this thing's hit 5 of our price targets. And I think the easier money, or if there is ever easy money, that's come and gone in a name like this. This is just a nosebleed uptrend. I don't know. What do you do with it?
You sell calls.
Yeah.
You sell calls against those highs all day long.
So I was just freshening my coffee, took a peek at the news on the television. They're talking about how the duopoly for these weight loss pills for Novo and Lilly could last until 2026.
What is a duopoly? That's a monopoly, but with 2 companies?
They are going to dominate this space, and there probably won't be any new entrants to compete with them until 2026. Can they keep these dangerous drugs on the shelf that long? I don't know.
How did we get to them being dangerous so quickly?
They're dangerous. I know they're dangerous. You'll find out later.
The doctors say that they're dangerous. You know, I am not a doctor. This is not medical advice, but the people that I trust tell me to stay away from that shit. Not that I would ever take it anyway. I'm scared of all that stuff. Like, I've never taken any drugs before. Like, this is what do they say? This is my temple, right? Be careful what you put into your temple.
Is your temple. Yeah.
All right.
Right.
Okay.
No?
Guys. I got a good recess. I won't.
Hold on. Strazza. Are we so we're going to wait. Let's finish this topic. So we're waiting for earnings, which is on November the 2nd, if I'm not mistaken.
Yeah.
The day after earnings, then we just make it rain out of the money calls all day long.
In what stock?
Eli Lilly.
Yeah.
Sell the 600s all day, just making it rain. 600 calls.
Yeah, why not? Yeah,
I can't think of a reason why not. So I was waiting for you to give me one.
Nope. I think that's fine. And that's not a trade I would normally make, but at this point, I don't. This is enough. This is enough for this stock.
It's a hell of a move, man. Hell of a move. Hit the targets. It's consolidating. You make it rain calls. You could probably make that trade. If it's churning sideways, you can make that trade 5 times, 6 times.
Sean says this is irresponsible.
How about AMD pushing positive on the day, huh?
Sean, that's not what you said yesterday. You said after the earnings, it's less irresponsible.
No, less irresponsible is still irresponsible. It's just less irresponsible.
All right.
I don't know. Sean has it in his calendar.
I'm okay with less irresponsible.
Yeah.
Oh, man.
Yeah. What about this General Motors short? Nobody's interested?
Aren't these stocks just boring, though?
Yes, that's why nobody.
Wouldn't you prefer your shorts to be boring?
No.
You know what I like that looks a lot like it? JC, pull up City.
What a hot piece of garbage this thing is.
Wait. GM doesn't even move. GM in 10 years. This thing hasn't.
Spencer. That's what I'm saying.
Yeah,
right?
no, I'm telling
volatility
JC
stock.
though. What JC GM is so range bound. Why would you even short it? It'll be
Because
at 30 forever.
I'm shorting a break out of the range.
Okay, so you'll short it from 30 to 28. All right,
If it's below 30, I want to be short.
and then it'll go back up again.
And
'cause
then
that's what this thing-
maybe, and then we'll get stopped
That's-
out. Or I can cover
Yeah.
when it gets to 0.
Financial's getting a nice little bounce these past few days, huh? How about that? I think they really needed it.
I mean, it's now or never for financials and small caps. If they don't step in here, that's all she wrote. These micro caps.
Wow.
Interesting reversal. Some of my contrarian indicators, like the people that are just wrong no matter what they say, are pointing to micro caps breaking down. I started noticing that this week. My best contrarian indicators, like literally the worst people on the planet, are pointing to micro caps. Just want to throw that out there. It's anecdotal.
The people that you like to fade are being obnoxious about micros?
That's right.
Huh.
And for the record, nobody talks about micro caps other than me and Strazza. Like
That's why I'm
nobody.
surprised, because you,
Right.
you rarely hear people. Right.
That's exactly right. It's one of those like obscure indexes and ETFs that like nobody talks about, but because we look at everything, we do talk about it, and we do find it helpful, by the way, over many, many years. But when you see some of my contrarian indicators that are just the most wrong at all the turning points, they're pointing to micro caps as a reason that the rest of equities are going to go down. So in other words, what they're suggesting is that the least important companies in the world that almost don't matter at all are dragging the ones that do matter the most.
JC, you got me thinking now about this CME here. I do like this setup. I think base is complete. I think we can look to Interactive and SIBO for what this path forward might look like for a stock like CME. Really well defined here at those pivot highs. Dude, there's like 4 stocks on the new highs list today in the entire United States, and CME is one of them.
Yeah. CME also just underperformed for quite some time. It's not like it's not anywhere near all-time highs like CBOE.
No, but new 52-week highs.
Look at us, Chicago Mercantile Exchange, Chicago Board. Can we talk about how next Wednesday we're going to be in Chicago? Anybody in the Chicago area that wants to come hang out, the Chicago Board of Trade, 5 o'clock, email us. We'll send you the registration link. I tweeted it out. It's on the blog. If you can't find it, email us, but it's pretty easy to find.
Hey, these online education stocks just keep going higher. And you know what? I was flipping through some Chinese holdings. This Pinduoduo really just still looks really nice. So pockets of strength, even in China. How about it? Look at that. Good chart. Good chart.
A little hot corner.
Could you
What do think,
imagine?
Spencer?
Yeah. Can you imagine if like there actually was like if SPY had like a significant allocation to utilities and staples and all that?
They do in Italy.
Like
the Italian index is big on utilities.
Can you just imagine, like, because I'm just looking at like staples and utilities right now, and like, it's just like, can you even imagine? Like, thank God for tech, honestly. Where would we be?
We'd be where Europe is.
Hey guys, how about some Strazza Spotlight?
Yeah. We look like Europe. Do a little Strazza Spotlight, then we'll hit the hot corner.
It's a little spotlight.
Oh man,
give it to him.
Strazza Spotlight.
Give the man his flowers.
Okay. Let me dig up that was a right turn. Let me dig up my video here. This weekend I'm going to get my stream deck working. So anyway.
Mm-hmm. Okay, 2 charts that are on my mind. Let's start with the median stock. Really, this is one of the broadest, best representations that we have of the entire stock market. This is the Value Line Geometric Index. Tells you what the average stock is doing. The average stock oversold and at its lowest level since last October, a few weeks or a couple points away from new 52-week lows. What say ye about this ugly chart?
Well, it's not the average stock; it's the median stock.
I said median first, but I prefer average because those two things are very similar, and some people don't understand what median means.
But that is their problem. It is not the average stock; it's the median stock.
I'm well aware of what this is.
Aren't you the math major around here? What are you doing over here, bro?
Sometimes you just say things that people can understand, and if
it's not your problem that it's not your problem that people are ignorant. It's not the average. You sound ignorant. It's not the average. It's the median. And by the way, think about this. The bifurcation between the larger market capitalizations and the smallest is the widest it's ever been, making the median and the average the most different it has ever been as well. Am I wrong?
You got anything good to say about this?
Just saying. Middle of the road. Thank you, Ian Colley. Ian Colley coming in. He's right. Middle of the road. That's right. I put this with small caps. I put this with financials. It's now or never. They got to dig in. No? Same category?
Yeah, it's the same chart. Yep. Internet stocks. They are so important. Why? They are your current leaders. So this FDN made up almost 30%. Look at Google here today. Google's about to make new highs. I think, throw up FDN. I think a retest of those old highs is basically a foregone conclusion in Meta and Google right now. Meta, you got about 20-25% to get there. Google only about 10%. I was talking to Sean yesterday, just asking, like, what is the best way to play this? He didn't love it because we do have earnings coming up. But
straddle, Meta, why are we buying a straddle? Is it that expensive? Can we get him in here?
Meta volatility is as tight as it's been, or low as it's been since the highs.
So why are we buying a straddle now?
Why are you asking me? I don't know.
I'm like, I'm asking. I'm just thinking out loud. Like, what is the reason that we don't own a straddle in Meta today? Can we get Sean in here? Sean, are you around? Get in here.
Can we throw up the FDN chart?
Yeah.
We have Ian here too, just so you guys know.
Yeah, we're gonna do both.
Bring in Ian too. Fine, but it doesn't change the fact that I have a legit question.
Look, JC 155, 156 in the Dow Jones Internet Index. Like I said, 30% of this index is Google, Meta, Amazon. These are strong stocks. This thing has to hold.
Google represents 10%, Meta is 8%, Amazon is 9%.
Yeah. So 155, 156, otherwise you're back in the box. You don't want to see these basing patterns come undone, especially not in indexes that have such strong, stocks driving their performance. FDN is up 26% year to date. How much of that do you think is those three stocks? How much of that 26% can we attribute to the big three?
Probably a decent amount.
Right. 14%, more than half.
All right. Two of those names are under SEC fire. That's probably a good thing, right? If they weren't crushing it, they wouldn't be under SEC fire.
It doesn't matter, and I think it's more than just SEC, right? It's
FTC.
No, it's FTC, which is a bigger deal, by the way.
Yeah, it's antitrust stuff. And guess what? If you don't want to own these stocks because of antitrust issues, then you're never going to own these stocks because they're
That's exactly right. Thank you, Strazza.
That's true. Wait,
what's the worst case scenario? They're going to pay some fine and everybody forgets about it. Whatever. Who cares?
No, that is the scenario.
And then as a shareholder, you just get shares in a bunch of different businesses. That'll be awesome.
It's fine.
Wait. Let's bring Ian on.
Bring on Ian and Sean.
All right, ready? You guys ready? I'm bringing you both on at the same time.
Do it.
Okay, here we go.
Instant charts.
Ian's here,
man, now it's a party. Oh my God!
Have we ever done this? Have we ever done a fiver?
Wow!
I don't think I've ever shared a screen with Ian Cully. This is first.
Wow.
We have an echo though. We've got an echo.
Someone, come on! When you call into the radio station, turn your radio off.
Ian Cully.
Might be me.
Mute Cully.
Bro? Ian,
bro, I'm not hearing any echo.
Do we want Sean to answer your question about strangles and straddles? Or
Yeah. Somebody mute Ian.
Yeah, I'm working on it.
Ian,
Somebody mute Ian.
This was fun. Goodbye.
Mute Ian. All right, there we go.
Ian, it was fun while it lasted. That was great.
Hold on, Ian. I'll talk to you.
Sean, can we? Can you? I'm still
It's
hearing the
Sean.
echo. It's Sean.
It's Sean.
How am I echoing?
Goodbye.
Goodbye. Get him out of here.
Ian, you're back.
It wasn't me?
It wasn't
No,
you. You're
okay.
good, Ian.
All right. Ian, talk to us about these charts, dude. I love your gasoline and CAD chart. David Cox liked it too.
Yeah, you dropped that on my desk.
Throw that up. Throw
I
that
had to
chart
throw
up.
it in. I had to throw it in the post.
Throw
So
the
what do
chart
we
up.
make of this, right? So there's obviously mixed signals for energy, particularly energy futures, right? Like crude and heating oil look one way, gasoline looks terrible. Lowest level since January, right?
Yeah, and you know, looking at we mentioned it last Friday. We talked about the crack spread. You know, breaking down to or contracting to a multi-year low. I mean, that's
Refiners look terrible. They got smacked since last week. That was a great indicator, maybe.
Yeah, it's just not bullish evidence for a continued uptrend for energy and crude oil. At the same time, crude oil is running into a logical level of overhead supply. You know, and it's been ripping.
But
So,
hold on,
you know,
go back to the crack spread and explain that for people, because this is really interesting. I think it was great information for us here again. Crack, the refiners ETF, has been absolutely decimated, down 7% here this week. One of its worst weeks of the year for sure.
You mean it sold off when it hit resistance?
Talk to us about the crack spread. Maybe Fonz, you could throw up a chart of crack too.
yeah, it's the operating margins for these oil refiners.
What's the math behind it again?
What's that?
What's the math behind it?
It's three barrels. I think three
oil makes
three oil go to 2 gasoline and 1 heating oil.
Right, and it's basically telling you like the quality of their financial position, right? How much money they're making in this business of selling gasoline and other distillates. So crack spread go up. We expect crack and refining stocks go up. Right now, crack spread go down, and now you're seeing refiners catch lower.
Right. The crack spread, rising just speaks to that demand for the distillates, that underlying demand that spills over into crude oil prices.
Yeah, that's
we're
the
not
crack
seeing
spread.
it.
Yes, Rachel. Oh yeah. I like a good olive spread.
An olive tapenade.
A little tapenade. All right, what else you got? We lost.
Well, like the Canadian dollar, rolling over, like the U.S. dollar CAD breakout. Oh, here's Sean. Here we go.
Sean's back. All right, dollar CAD.
Dollar CAD breaking out. I like cocoa short. I like natty gas long. Big day for natty gas yesterday.
Yeah.
I think
big day again today.
Big day. Yeah. Well, it's doing well today.
Holding 3. If you're above 3, how are you not long natty gas?
Right.
You can buy this right here, right now, right? Are you long, Ian?
I am long. I got a small position. If we look at the November contract, we're still in the middle of a range. So, small position, wide stop until we get above, 3.25, 327, and then, I'll tighten up that stop and maybe add a little bit.
So nat gas looking good, looking like it's booking this reversal pattern. Nat gas stocks look terrible. You see Devon Energy?
No, I haven't looked. Is it rolling over?
Lowest level since January of 2022.
This
is an energy stock.
Yeah, but we all know that the natural gas futures and the natural gas companies themselves are two different stories.
Yep.
Yeah,
they always have been.
Yep. Good point.
All right, final trade. Can we bring in Sean? You fix your echo first time here on the morning show?
Hey, don't blame me for your shitty tech.
My shitty tech. My shitty tech. All right. There's that echo again. Can you just tell me why we're not long straddles on Meta? Can you throw up slide 1?
What's going on here, guys?
Yeah, what is going on? Why'd you kick him off?
All right.
Been doing this all year.
I didn't do that. Sean left himself. I didn't kick him out.
Well, here's Meta. And
Oh, wait, he's back. He's back.
Volatility is as tight as we've seen it, right? I mean, this doesn't include implied volatility.
Yeah, I got the
Sean?
chart.
All right, is the echo fixed?
Sounds it.
Maybe.
You know,
right.
Sean, why don't you just put your response in the chat?
No,
Wait,
I'll just tell. I'll just tell you right now. Actually, let me ask you. What's your time frame for this trade?
I don't know. What I'm thinking is that this thing can't stay as tight as it has been forever. So why don't we make a bet that it's not gonna?
Yeah. I think you get 20 to 25% back to those old all-time highs. I think it's almost, like I said, a foregone conclusion. And we probably get there by the end of the year.
Here's my time horizon. Here's my time horizon,
answer is
Sean.
the same that I gave Strazza yesterday.
Hold on. Stop.
I did ask about this.
Hold on. He asked me my time horizon. My time horizon is this. Depending on how low and cheap you tell me volatility is, we go out as far as we possibly can, and that becomes my time horizon. How's that?
Volatility is not cheap is the problem.
That's the problem. Volatility is not cheap. You're going to be overpaying. You're going to be swimming against stream. This thing could have a big move following earnings, but the premium's going to get totally sucked out of there. You might make money.
But what if these are like a Q2, like a April, May or something? Aren't we diluting this short-term volatility?
If you're waiting, if you want to go that far out, then you might as well just wait out the earnings and then put the trade on after earnings.
Okay, I'm okay. Well, that's what we decided to do yesterday. I'm wondering why we're just not long now.
Well, here's what I worry about. That earnings is that catalyst that puts you back at those old time, right?
But you're not going to miss that much upside on that trade because the premium is going to come out of that pretty fast, pretty significantly.
So the answer remains the same. Just wait till our calendar turns November the 2nd.
And so the lesson here would be volatility in an issue being low, like we're showing here with the Bollinger bandwidth, is not the same as implied volatility, saying that the option is necessarily cheap. Two different things.
You are very correct. In fact, I'm looking at implied volatility right now. You guys can't see it on my screen, but implied volatility in Meta right now is the highest it's been since April.
Wow.
Yep.
Not where I want to be buying anything.
Spencer, the people can't see my face. Spencer.
All right, I know. I kind of like it this way. Can we do this permanently where we just put the logo on top of Strazza's face?
I'm sorry.
No, this is a good answer. And this is why I asked the question. My question was, why are we not long a straddle right now? And it's too expensive. I like it. Okay, no. So we're basically right where we left off yesterday in our meeting. Was that yesterday in our meeting or 2 days ago? It was 2 days ago.
Our analyst meetings are on Wednesdays.
I lose track of what day it is. Today is Friday, Crypto Friday. Shout out. So we're waiting. We set our alarm for November the 2nd, and nothing changes. We're still doing that. Okay, I feel good now.
Throw up the recess boom.
Hit it.
Okay.
Okay, first of all, Ian, take this question. Can you use a VWAP on commodities? Might be a dumb question. It's not a dumb question.
No, why not?
No, you can.
Yeah.
Right.
Yeah, of course you can. Yep. We've got volume.
Okay.
I think the big question is, can you use it on currencies or FX pairs? And I would look at the futures contract for that, and you can use AV on this. Yeah.
So I started a new show last night.
Hey now.
It is one of those biopics. I really like these biopics. I'm like the tech startup founders. Didn't know that this was a show, but it's probably pretty good. It's got that, what is it, Joseph Gordon-Levitt, right? So he plays Travis Kalanick, and it's called Super Pumped. And it's a short miniseries about the growth and backstory behind Uber. And Kalanick was a bit of a I don't know, what would you say, Spencer?
Tell me how that is. I didn't watch it. Tell me how it is. I did not watch that show.
So I watched the first 30 minutes and it was pretty good, and then I fell asleep. So I'm not even an episode in, but I plan to watch the whole thing. It seems pretty good. Yeah.
I'm going to be in Chicago on Wednesday. If somebody can give me a good lunch spot in Chicago. I haven't been to Chicago in 4 or 5 years, actually. Which is crazy. I haven't been to Chicago in 5 years. It's literally right there.
Can Chicago Sean give you any racks?
Luminati's. I don't know.
You know,
Luminati's is the most overrated piece of hot garbage.
JC, this might be
that shit.
JC, as a new parent, this might be in your wheelhouse. I took my son to Chicago this summer, and we stayed downtown, and we stumbled upon a cafe that had no idea it existed. I'm sure it's new, but it's a Nutella cafe.
Ooh.
I don't know if your kids are into Nutella, but around here, that's like all what the kids eat.
Dude, I have 3 kids under 3. You think I'm taking them to Chicago? You're crazy, bro. I'm going by myself. Thank you.
But my point is, you can go to the Nutella cafe. This only works if your kids are into it, right? But you could go there. You could get a Nutella jar with their name on it, so it looks like instead of Nutella, it says your kids' names. My son has one. He thinks it's the coolest thing ever.
All right. So when my kids are as old as yours is, I'll take them to Chicago. In the meantime, they're staying home. Right? Ian, tell them. Before you have 3 kids, are you even a parent? Like, seriously.
Yeah. I'm not taking my 2-year-old anywhere. When he was like a year and a half, taking him out to restaurants. Now, he doesn't leave the house. Except to go to the playground.
That is hilarious. All right, guys. I got to hop. I have a field trip today, by the way. Field trip this afternoon. Doing a little pumpkin picking with the pre-K class.
Nice.
Always fun. Hey, stay tuned. We are myth busting on What the Fick today at 11:30. Ian and I, or mostly Ian,
I saw that hot graphic. I'm excited about that.
Busting some myths on stocks versus bonds. So come on by for that. We'll see you guys there. Thanks to our guests today. Thanks to Kimmy. Thanks to Anne-Marie. Thanks to John. Thanks to Sean and Ian as well. Thanks to all of you in the chat. We'll see you guys later. Go make some money.
Happy Friday, everybody.
Adios. Go Dolphins.
Boo.
Hit the bumper.
I'm trying. Dude, my computer's
not playing ball today. They play Georgia Tech.